include American Express, Capital One, Discover, Early Warning Services, Synchrony Financial, and Navy Federal. All CPNs are about to get canceled. Now, what is a CPN? A CPN stands for a credit profile number or a credit privacy number. Essentially what it is a stolen social security number that fraudsters and scammers use as an attempt to get a restart on their credit. So in today's video, I'm going to be discussing exactly how CPNs are going to get canceled. This is an article from the American Banker, why Experience joining the government's social security verification test. Seeking relief from rising synthetic fraud, U.S. companies next year will begin to quickly verify whether social security numbers match other consumer data in government files in a bid to prevent fraudsters from creating fake identities with stolen information and social security numbers. It won't be a silver bullet, but it will go a long way towards deterring synthetic fraud by preventing fraudsters from opening new accounts with bogus combinations of social security numbers and names. Synthetic identity fraud has risen sharply in recent years, and some of the problems stem from the ineffective systems the Social Security Administration has been using to generate new social security numbers and verify existing ones using slow and paper-based processes. Creating an electronic database to verify that social security numbers match the correct consumer data could also mute losses from the related problem of lenders unwittingly granting existing synthetic accounts fresh access to credit. One of the biggest areas of loss around synthetic account fraud is when one of these fake accounts gets approved for credit extension. Experian is the only credit bureau among organizations participating in the pilot. Other companies that applied in the Social Security Administration approved include American Express, Capital One, Discover, Early Warning Services, Synchrony Financial, and Navy Federal. Lenders and banks will be able to use the Social Security Administration's new electronic consent-based Social Security verification of whether a Social Security number matches Social Security Administration records. The pilot came out from a provision in the Economic Growth, Regulatory Relief, and Consumer Protection Act, which allowed the SSA to develop an electronic version of its current consent-based Social Security verification system, so an organization may confirm in real time whether a Social Security number combined with the name and date of birth matches what the SSA has on file. Fraudsters have been getting around that process by using the actual Social Security numbers combined with other names and information to create fake identities that successfully obtain credit, leading to huge losses. Synthetic identity fraud also drives large losses for automotive lenders and entities making personal loans. Once a fraudster obtains a credit account, they typically work to make the account look legitimate by making some purchases and paying their bills to establish a trade line. The synthetic account usually masquerades as a legitimate account in good standing for a period of time, a few months to a year or more, before the fraudster suddenly runs up purchases to maximize credit lines and then disappears. The SSA has been under pressure for years to come up with a better way of verifying consumer accounts and working towards a solution that has been difficult because the agency's primary role has been providing benefits, not verifying identities. Now, basically what's going on is that the Social Security Administration has been under pressure for several years due to the increase in synthetic identity fraud, or people using these CPNs. A lot of lenders are adopting the electronic consent-based Social Security number verification. So pretty much what's happening is that they're cross-checking with the Social Security Administration to see if a Social Security number matches what's on file. Early Warning Services LLC is a fintech company owned by 7 of the country's largest banks. Early Warning is co-owned by Bank of America, Truist, Capital One, JP Morgan, PNC Bank, US Bank, and Wells Fargo. So these are the 7 largest banks in the United States. Early Warning provides services and solutions to help financial institutions better detect identity fraud and determine the likelihood of first-party fraud or account mismanagement, all in real time. It does the following: matches and verifies applicant's Social Security number, name, and date of birth with the ultimate source of truth, the Social Security Administration. Now, according to a recent report, Application Fraud Trend Analysis and Mitigation Challenges prepared for Early Warning Services, environmental conditions brought about from the severe and social disruptions resulting from the COVID-19 pandemic since April 2020 have accelerated growth in application fraud rates as demand among financial criminals for money mules and bank accounts associated with stolen and synthetic identities has increased to support with the movement of fraudulently intercepted payments from government stimulus programs. Now, this figure shows the estimated application fraud losses from 2015 to 2019. And as you can see, among demand deposit application fraud losses, as well as credit card application fraud losses, you see a steady incline. However, credit card application fraud losses have been growing at a much higher rate. The majority of respondents from a survey of 47 fraud executives from U.S. financial institutions revealed that they have experienced increases in application fraud since the pandemic began. Now, you have companies like Early Warning Services, which is a consortium of the 7 largest financial institutions in the United States, and they've come up with different techniques and frameworks and tools to combat fraud. So one of the most effective ways is Social Security number verification. So they're literally connecting to the Social Security Administration database, which is the ultimate source of truth, and verifying whether or not that Social Security number was issued and belongs to the person. Now, going forward, a lot of lenders are going to start adopting the electronic consent-based Social Security verification. So that's going to put an end to all CPNs. So going forward, it's going to be much more challenging for people who are trying to fraudulently obtain credit. Now, aside from the Social Security Administration verification, you also have a lot of income-based verification as well. Now, there's a ton of companies out here that do employment and income verification, but one in particular is called Inverify. Now, this company is owned by Equifax. Inverify is a leader and national provider of employment and income verification services. Now, the credit bureaus have evolved from just collecting credit information. They're going a step further now with verifying even your income through some of the different subsidiaries that they own. Like I just showed you with Equifax, they own Inverify, which confirms employment and income information. Experian, on the other hand, is also working with the Social Security Administration to verify identity. You even have fintech organizations like Plaid and Finicity that have bank validated insights for real-time view. Their service offers 180 days of validated transactions, so they could look up to 6 months into your bank accounts. So this graphic shows your current balance, your 6-month average, and then your 2-month average. Now, between identity verification, income and employment verification, as well as asset verification, financial institutions and lenders are now using multiple different data sources to combat fraud. So going forward, a lot of these shortcuts, especially with the CPNs and the synthetic identity fraud, is going to become much more challenging, especially as, trillion-dollar banks, you have companies like Early Warning Services that have so much information at their disposal. This is why going forward, you're going to see an end of CPNs. Now, some of you may have noticed that with a lot of credit applications recently from different financial institutions, there's been an emphasis on income verification. So you might have to provide different documentation, including bank statements, tax returns, or even pay stubs to validate and prove your income. So I've teamed up with ADP. So ADP is the leading payroll provider. So if you are a small business, self-employed, you can actually enroll with ADP. Then you can essentially create your own pay stubs 100% legitimately. Now, if anyone is interested, there's a link in the description of the video, and all Credit Plug subscribers and members can get a discount when they enroll with ADP through our special affiliate link. Anyways, that's all I wanted to cover in today's video. Let me know your comments and questions right down below. And until next time, take it easy and we'll talk to you soon. Peace.